Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index climbed to around 100.6 on Friday, its highest level since mid-May 2025, and is on track for a second straight weekly gain. Investors are continuing to favour the dollar as a safe haven asset as tensions with Iran escalate and there's still no clear path to de-escalation. Any release from strategic oil reserves could temporarily cap energy prices. Until then, mixed signals may keep the dollar supported. WTI crude experienced extreme volatility last week, surging to $113 before plunging to around $76, entering a wide trading range. Discussions about a record strategic oil reserve release by the IEA pressured prices short term. However, escalating Middle East tensions, shipping risks in Hormuz, and over 6 million barrels per day in production cuts from major producers continue to support a strong risk premium in oil markets. Gold prices declined last week as short-term futures traders locked in profits, while a stronger US dollar also pressured precious metals. Spot gold briefly pulled back toward the $5,000 per ounce level. Investors are closely watching the upcoming Federal Reserve meeting and US energy inventory data, while any sudden development in the Middle East could trigger sharp volatility. The yen continues to trade near 159.7 against the Japanese yen, close to the highs last seen in January. After briefly pulling back from earlier peaks, the pair quickly found trendline support and rebounded higher. On the monetary policy side, Japan's producer prices rose 2% in February, the slowest increase in nearly 2 years, while policymakers are urging the Bank of Japan to remain cautious about further tightening. The euro traded slightly above 1.14 last week, hovering near an 8-month low, as investors continue to assess developments in the Iran conflict and the impact of rising energy prices on inflation. Earlier this month, ECB chief economist Philip Lane warned that a prolonged Middle East conflict and declining regional oil and gas supplies could trigger a significant surge in inflation and a sharp slowdown in the Eurozone economy.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.